It is no wonder that so many people want to come and purchase a vacation home in Puerto Rico. It is just obviously one of the most stunningly naturally beautiful places in the whole world. And the culture here too, I mean, it's made hanging out and having fun just like an art form, really. I mean, there's words in the Spanish dialect in Puerto Rico like chilear, angueo, that is just like the level of excitement for any Friday in the year, that like the anticipation of all the fun that's coming is unlike any other place, at least that I've ever lived. It feels like each weekend is like Christmas. It's like that level of excitement, right? And so naturally, lots of folks want to come to Puerto Rico, or if you're from here, you want to come back and have a place that you can call your own and come and vacation to. And so this video is all about how to help you achieve that. I'm going to talk about, what are the requirements as far as credit, income, and assets if you're going to use financing to do it. If you're going to use cash, you can go on to the next video, because this is all about how to use somebody else's money to help you buy that vacation home here on the island. Ready? Let's jump in. So first thing that we're going to check if you apply for a mortgage is credit, right? And don't worry, there's no hard inquiry just for applying. The idea of a mortgage application, at least with us, is that it's supposed to be exploratory, right? We just want to find out, okay, how does it look? How does the finances look, so that we can advise on if you need to make any changes, if maybe we need to track a document down, maybe we need to work on your credit and have you come back. But the idea is that with just a soft inquiry, right, which we only need like 3 pieces of information, and we hit a button and we have that info, right? We're going to have your FICO score, and we're also going to, more important than the FICO score, we're going to know the sum total of all your minimum monthly payments to all debts you have reporting on your credit, right? So FICO is super flexible, right? So we can get you a mortgage for a second home or vacation property with FICO all the way down to about 640, right? Now, it might depend on like why your FICO, if you have a low FICO score, there's things that can be on that report that might be stumbling blocks or challenges we have to figure out. But like I said, the credit piece of the mortgage puzzle is very flexible. We can go down to 640, possibly even lower, but you're going to be seeing that you have to pay additional discount points to get any rate at all, right? And so, but credit is super flexible. And then, like I said, we're going to look at the FICO score, but more important than that is going to be the sum total of those debts that you've got reflecting. That combined with your income, which I'll talk about in a minute, is going to be what goes to, we're going to do the math, figure out your debt to income ratio, and that's going to inform on what's your max purchase power. Okay, and so all things that we do just regularly in the application. The income piece, lots of different types of income that we can accept, right? And so we typically ask you for some documents to help support that. But we try to keep your debt to income ratio at 45% or below. You're going to see an improvement in your interest rate for that. And what that basically means is that if you look at your gross monthly income, right, that you're reporting to the IRS, so gross monthly income that you're reporting, we can use just a little less than half of that income for all of your debts combined, meaning whatever housing expense you have if you're renting or if you own your home, okay, plus the minimum monthly payments of all other debts added up together. So if you have credit cards, car loans, student loans, even if they're in deferment, all those things, we add up all those little minimum payments plus the future mortgage payment that you're going to have, right, for the vacation property. And all of those debts, all those obligations need to total up less than half of your gross monthly income. Not sure what those values are? Don't worry, guys. That's what I can help you with, right? So my contact info is in the description. I can help with that. But anyway, that's the income piece. That's how it relates to the credit piece. And then the third piece of the puzzle that we look at, and probably for a vacation property is going to be the most important factor, is going to be assets or savings, right? These are the funds that you have available for the down payment and closing costs. So let's talk about what those values look like so that we can start determining if you've got enough, right, to be able to get to the closing table. So for a vacation home, like according to guidelines, right, like federal loan program guidelines, it is possible, according to guidelines, to buy a vacation home with as little as 10% down and or 15% down. However, that is, even though the guidelines say that that's allowable, in this market right now, and I'm recording this in July of 2024, that is a difficult scenario to find a lender who's offering interest rates that are attainable for that little bit of a down payment, right? So obviously everything with interest rates is related to the risk that the lender sees in getting their money back, like repaid from you making your loan payments, okay? And at 10% down, it's just too risky. They're charging, to get any rate at all, you're having to pay like tons of discount points, and there's just not really rates available. 15% down, maybe if you have absolutely stellar credit and income, your debt to income ratio is low, the property type is going to also factor in there. Maybe we can get it done with 15%. We can explore that. If you reach out to me, happy to help you and look at that. But for the majority of folks, it's really, these days, it's going to be 20% down minimum, okay? And you're likely going to see, depending on credit, some discount points charged to you at closing to be able to get any rate at all, okay? Even with good credit, right? Now, if you have excellent credit, that's going to be, less discount points, very likely, if any, right? And so that's something that we can explore too, if you have to or not. If you want to get lender credit, you can take a higher rate. Anyway, all things that we can discuss in the process. But then also too, if you're able to go an additional 5%, right? So 25% down, that's where we see really big improvements in the interest rates, really big improvements in like there not being any discount points charged for that. So even if there's questionable credit, having 25% down for an investment property, or a vacation home, not investment, a vacation home, that is like a recipe for success for a lot of folks if they've got those funds, okay? Because a lot of people end up being like, well, do I pay 5% more and have like improved equity position when I close and a lower interest rate and fewer discount points paid at closing? Or am I just gonna try to keep my down payment at 20%? I know I'm gonna pay some discount points, but it's gonna mean a little bit less out of pocket, even if the rate's higher. So these are the kind of the scenario questions that we get into with a vacation home in Puerto Rico. Property types, right? So there's specific property types that are allowed for a vacation home loan program and those that are not. So we can help you buy a single family home, right? No problem. We can help you buy a condominium so long as it's warrantable. Check this video here to see a video all about like what does it mean, like what does it take extra, because condos have their own special requirements, but so long as the condo qualifies and is eligible for conforming loans, we can help you buy it as a second home. And then also those are going to be the two main types, right? So it's single family home or condominium. Multifamily properties are not allowed to be bought as a second home. And the thinking is basically that, well, if you're living or if you're part-time living, like vacationing, using one of those units as a home for yourself, a second home, well, then you can't be living in all of the other units. And so those would have to be rented out. And if they're getting rented out more than 10 days a year, that means it's an investment property. That's an important distinction, right? I'll circle back to that. So that's one of the main critical differences between an investment property that you're going to visit and use sometimes yourself and a true second home, is that the second home or a vacation home type of loan program, that means that you're not going to be renting that property any more than 10 days in a year, okay? Then it can qualify for second home. But for vacation home, you can use it on your off time. That's allowable. It doesn't have to be a pure investment like somebody in there with a lease. Maybe you want to short-term rent it for some of the year and that you use it for other parts of the year. That's totally allowed with an investment property type loan. But we're going to see a big difference between, if it's an investment property, that means that you're definitely going to be renting some of it. And if it's a second home property, that ideally means that you're not going to be renting it, at least not any more than 10 days in a year. Other super critical differences between an investment purchase and a second home purchase, because really like the interest rates and the terms are almost identical, okay? Like very, very similar in terms of the rates and the terms that are allowed. But very important difference is that if you're buying a second home property, a vacation home, you're allowed to use gifted funds, right? Maybe mom, dad, friends, family. They can give you some of the funds for your down payment and closing costs. For an investment property, not allowed, okay? Meaning all of the money to buy an investment property has to come out of a bank account or some kind of an asset account with your name on those statements, okay? You cannot use gifted funds to buy an investment property, but you can use gifted funds to buy a second home. Another really important difference is that if your numbers, like your debt to income ratio is really tight, if we structure your purchase as an investment property, because you aren't going to be intending to rent it out at least some of the time, and we can do that, and then we can actually use the rental income that we expect the property to get to generate long-term rental income, not short-term Airbnb income, but long-term rental income. We can use that on your application as if it's money that you're receiving right now. There you have it, folks. Those are some of the most important things to know about buying a second home in Puerto Rico, especially juxtaposed with buying an investment property in Puerto Rico, because those things are very, very similar, but really it's going to come down to how many days a year are you planning to rent it out, if at all, and then where are the funds coming from for how you're going to purchase it, and the property type as well. But I'm happy to help advise. If you're watching this and you have questions, you want to know, can you qualify for a second home or vacation property? How much can you qualify for? That's what I do, folks. My contact info is in the description. Thanks very much for having watched to the end. If you found some value in this video, feel free to hit the like button or maybe even subscribe so that you can get updates when I'm releasing new video about how to buy in Puerto Rico using financing. But thanks very much for watching, and I'll see you next time.